Hey, this is Sasha Evdokov. Welcome to another episode of Let's Talk Stocks, episode number 77. And in this week's episode, what I'd like to do is share with you some insight about trading during pre-market and after-market hours. So I'm going to just give you some insight about pre-market, after-market, trading in them. What is it that I do, what I don't do? And that way you just get some insight if you want to trade pre-market or post-market. So in order to do this and show you some examples of what pre-market and post-market is, I'm going to be using the Thinkorswim platform here with TD Ameritrade. It's just an easy platform to teach with because I can make things larger and bigger. Normally, I do prefer the TC2000 for scanning stocks right here, or you can take a look at it at freestockcharts.com. But in general, this platform, unless you have the platinum version, I believe, it doesn't really allow you to see the pre-market and after-market hours, at least not very well. So I'm just going to use Thinkorswim to demonstrate this because you can see here in the gray areas of the charting area that you can see the pre-market and aftermarket. So first it's aftermarket, and then the day will split, and then it's pre-market that's being shown. And it just depends on which stock you type in, whether that's a Netflix. You can see all those little gray areas. Those are not regular trading time frames. And if you go into the 5-minute, you can really start seeing those pre-market and aftermarket hours. So first off, what is pre-market, aftermarket, and give you the big picture of do I really trade during those time frames and is it worth it? Long story short, pre-market and aftermarket hours are just not regular trading time frames. They are something after the 4 o'clock bell and something before the 9:30 opening bell. So you can trade pre-market quite early, I believe anywhere between the 4 a.m., which is really the really early pre-market, but 6 a.m., 8:30 a.m. is really where things start picking up, and you slowly can see that with the clock over here on the bottom. Okay, and you can do some research about that if you really are interested about when exactly it opens. But the thing about pre-market and aftermarket trading, and I'll give you some caveats or some problems that go along with it, is that really the liquidity is light. So you can see that trading right here is very limited. So you won't be able to trade large positions or large accounts if you have a larger account. It's a little more difficult. The liquidity getting in and out is more difficult. So that becomes a little bit of a problem. And not to mention that because of the weak volume, sometimes you get really bad fill rates. So that's one of the things, is that you want to make sure you use limit orders when getting in or out of trades during pre-market or after hours. As for me, do I trade pre-market or aftermarket? No, I don't. I very rarely, if I do, maybe 1 or 2 times or trades, I will trade pre-market or aftermarket hours, and it's very rare. And the reason for that is usually most of the time it's to get out of positions rather than to get in positions. And that is simply because I see selling coming in, or I see problems, or I need to really take profits because there's some news that came out. And if I can get out, I will get out ahead of time rather than waiting for the market to kick in later, taking that stock lower. So for example, take a look at Netflix right here. Let's just say, what would have been a great thing to do here? Let's just say you had a large position and you were ready to get out of the market in Netflix, but you weren't sure if it was going to pop, but then some news came out right around this time frame, and you started to see this stock is acting weak and it's selling off further in the pre-market. And this usually tells you what's going to happen throughout the day. And we'll talk about that in a little bit. But with this pre-market, it tells you what typically will happen throughout the day and gives you just some clues and insights. So if you are in a position and you're already at that brink where you are ready to get out of that position and it's nearly hitting your stop, rather than waiting for this stock to open up, continue moving lower, blow past your stop, let's say at $98, then then it's almost better to try and get out during pre-market at 99. So if you had a stop at 98, rather than waiting for that stock to come down to 97, then you would have gotten out at pre-market, and that would have allowed you to do that. And that's one of the helpful things about pre-market, and that's what it allows you to do. And that's the way I personally use it. Now, I know there are some people and some traders can trade pre-market very well, and that's really what they make their core business about, is they trade pre-market or after-market hours, because the spreads, or the way that the trading happens, is it's more volatile, and that is partly because the liquidity is weaker. So if you're looking for a stock, let's just say like a price line, what you can see, what happens here at pre-market, right over here during this day where the terrorist attacks in Brussels here happened, price line started to sell off. Now, of course, we have this line of resistance right here overhead as well coming in. But as you start seeing it sell off right here, if you were quick enough and you read the headlines and news that, oh, wow, airline travel is going to be halted, or this stock, airline companies are going to take a hit, price line is also probably going to take a hit, and you start seeing this and you play it off of the news, what you could have done is right here at this little tick mark right here, which you could see at right around 8:15 in the morning. If you got up early enough, you could have done it at 7:40 in the morning or 7:15 in the morning, and even earlier if you would have done it the early pre-market, but this does not show that. But in either case, if you would have gotten in right here and shorted some shares at 7:40 in the morning, or even bought some puts, whatever it was, right around 7, 8 o'clock, then what happened? The rest of the day from 7:25 to 7:07, that's about a good 20-point down move that you got in that stock. Now, by the time you hit around 9 o'clock already, the news is already being digested. So if you're a little late to the party, let's zoom in right here. If you're a little late to the party and you're already going in at about 7:25 pre-market, there's no point. There's no point, no reason, because look at what happens here shortly. We get a bounce, we get a counter trend bounce, and then later stock continues to sell off further. So the thing is that already you're looking at this rubber band that's already overstretched and oversold. So that's why you get a counter trend bounce, because of the other people that have already been short. And that's why if you're getting into the pre-market, if you're getting in at pre-market around 9 o'clock in the morning, between 9 and 9:30, there's almost no reason and no point to trade it, okay? And one of that, the point for that is really, is that you're getting this bounce and counter trend bounce, and then you'll get that continuation pattern. So it's better to then just wait for that bounce and the rollover, okay? And that's one of the reasons why I also say do not trade the first half hour. Don't trade the first 30 minutes, because you'll get that counter trend bounce, and then you'll get further continuation on the pattern, on the movement on that day. Okay, so you'll see you get a bounce, continuation, and then sideways move or whatever kind of move you'll get. And you'll see that in stocks. It's one of the reasons why I say watch that first half hour rather than trading it. Now, if you know what you're doing, then by all means you can trade it. But if you're brand new, if you're just getting started in the market, there's no reason to trade that first half hour because it could just suck you in to only pull that rug out from under you, okay? And yes, if you understand what you're doing, you can trade it. So as far as pre-market goes, just like stocks in a regular price movement, whether you look at Apple, Amazon, Netflix, they get overbought, let's say over here overbought or over here oversold, and then they get a counter trend bounce. Just like stocks have that on a day-to-day basis and on a long-term weekly charts, you get the same thing that happens is oversold and overbought conditions in pre-market as well. So if you're coming into the pre-market between 9 and 9:30, I would say you've already missed the move, and just wait till digestion happens right around that opening bell, 9 to 9:30 or 9:30 to 10, and see how that stock is moving. If you're trying to play it right there at 9:15, 9:25, thinking you're smarter than the rest of the market or better than the rest of the market, you got another thing coming from you, because most of the time I find most people think they're going to be ahead of the news. But in reality, those things are already accounted for. And people that are really good, people that have access to this news, the knowledge, people that have already been planning this for a while, maybe 8 o'clock, 7:30, they get up early to trade that pre-market because they're experienced. They've done this before multiple times. And it doesn't matter which stock you're doing, whether that's a Priceline, whether that's Alibaba. You can see, look, right here, you got pre-market action over here in this stock. Right here, sometimes the pre-market will tell you what's going to happen with those stocks. So you can see here we have a selling. Okay, maybe it was oversold. We got a counter trend bounce, but you see what happens. Most people are trying to sell. And then later, you see that selling coming in the next day or two. And that's kind of how you can use it as a gauge to predict some momentum or action. But unfortunately, it's not a very strong indicator. And that is because the volume is weak. But it'll give you some insight to what some people are interested in doing. Are people, if they're constantly selling pre-market, then they're looking to get out of their positions. Typically, they're looking to get out. If you see constant buying in pre-market, let's see if Google has it. If you see constant buying in pre-market and you see it for multiple days, then people are trying to get into positions. So it's just something to look at and evaluate, but unfortunately, it doesn't tell you enough because it's scattered positions, because there's not enough volume, there's not enough data to really get a great gauge. It can give you some clues sometimes when things are overextended, and if they're overextended, they'll bring it back down. Okay, because it could be the shorts. So, for example, in this situation, let's say people were short and they're covering their position, ready to and to go back short again. Okay, so when you're short and you're buying back stock, it makes those prices come back higher right there. Okay, so that's kind of, it can happen in that way too. So if you're trading these pre-market, aftermarket hours, you definitely need to be extra careful. Sometimes you will get a little bit higher, a little bit lower prices than what you're looking for, and it can be an advantage. So for example, if you're looking to just day trade and you're trying to catch these lows over here and then the stock powers higher, that works out in your favor. On the other hand, if you're trying to day trade and you're buying it all the way up here, and you're thinking it's going for higher prices, then what happens the rest of the day? In fact, it doesn't work out and it doesn't happen. In fact, the stock goes lower. So for pre-market, I personally don't stress about the pre-market. I don't really watch it. I don't care too much about it. I care about my personal stocks and what they do on a day-by-day basis, how they're moving, how they're holding up, how they're behaving. That's what I care about. So for me, this pre-market, really, it's noise. It's nothing but noise. I don't pay attention to it. I don't really worry about it. All I care about is what's the overall market doing? What's the health of the market? And then I watch my stock throughout the day. Okay, so I watch how that stock is moving during the day. So whether that's a Google, if you're watching a Google, then you're watching it, okay, how is it moving today? Okay, not how it did pre-market, but today. Okay, and then you watch what happened on the chart. How is the chart holding up? Where's the support? Where's the resistance? Because that's more important. Those things are more critical, because who cares if the pre-market bounces around a bit here or there, if the rest of the day the stock powers higher or powers lower? It doesn't matter. If you're looking to nibble off of this pre-market with just $1 here or there, I'm not concerned about $1. Why am I concerned about $1 if the move I'm looking for right here, if I'm looking for a bounce of $85, why am I concerned about $1? I would rather wait to see and confirm on a day move, lose $10 on the trade, and get another $60, $70 run. That's what I'm looking at. So for pre-market, I would say most of the time, you're watching that. If you're looking to day trade the stock, or if it's a news catalyst play, like something like we talked about with a Priceline, is also another news catalyst. That right here with the Brussels terrorist attack is actually a perfect example, and one of the reasons why I wanted to talk about the pre-market was right here, because you can see slowly momentum picking up. It gives you a sign right here, this little tick right there stock goes lower again, stock goes lower again, stock goes lower again at 820. So from 720, then we go 755, then we go 815, 820, we still continue lower. We get a little bounce, so you would have had to be patient and understand that this is counter trend, right? And then it continues selling off further as things develop, and then the next couple days, again, we continue moving lower. So that's one of the things that you kind of can get an advantage on, is if you're playing earnings, news catalyst, terrorist attacks, FDA approvals, those kinds of things can give you some added leverage, can give you an advantage to pre-market. But if you're just trading like a regular stock, let's just say a basic Home Depot or a basic Walmart, one stock that doesn't move that much, these little pre-market blips right here are not going to give you that big of an advantage into the session, right? They're not going to a little point here or there to move Walmart around. I mean, it's up, 50 cents today? I mean, it's not going to be moving that much. These stocks don't move much. But if you're talking about volatile stocks like a Priceline, sometimes these clues right here, whether that's aftermarket or pre-market, they can give you clues. Now, which one should you trade more or less if you're trading pre-market or aftermarket? Okay, well, for aftermarket, I typically use aftermarket to get out of trades. That's me personally. But for getting into trades, if I was to ever do it, I would get in pre-market, because the problem is if you get in, if you get into a stock aftermarket, looking to get into it aftermarket, you still have a full 12 hours or so until that day, the trading day, starts to open up. So you need to wait, and at that point, things can change and develop completely differently. They can turn things around, especially if it's a bad news things, then they report, or some CEO starts tweeting, and then things start changing around. So that's kind of the problem with those, is that if you're getting in aftermarket, it can affect things within 12 hours. So you need to be careful. So for me, normally, if I was trading aftermarket, I normally would get out of positions aftermarket, which, as I said, it's very rare that I even trade during those times, but that's why I would do it. I'm just sharing with you my logic on why I don't do it and why would I do it, or when I would do it if I did it. And for pre-market, you're getting in mostly for those trades that are, again, news catalysts, news trades. And I would get in trades during pre-market if I wanted to trade pre-market. But again, normally I don't trade pre-market and aftermarket. And again, there's a lot of people that do. There's quite a handful of traders that do. They take advantage of it because there's a lot of stocks, a lot of penny stocks. They will trade them pre-market as well because they're looking for inconsistencies. But for me, I don't. And why is it that I don't? Well, the main reason is the volatility. The volatility. Things are all over the place. They can bounce higher. You can get things $1 less or $1 more. You don't know. So why am I going to worry about that? Why not wait until things are calm, things are moving in a nice stream? I look at the pace, I see the pace. Why not do it then? So for me, that makes it more easy. The second thing is, let's just say I want 20,000 shares of Netflix right here. And if I want 20,000 shares of Netflix, doing it pre-market is going to move that stock. You just simply can't do 20,000 shares of Netflix. You can't buy 20,000 shares of Netflix without moving that stock pre-market. So instead, what you would do is you would go ahead and put on a few positions, let's say 2,000 or 3,000 or 5,000 over in this area, maybe again another 5,000 in another area. Now you got your 5,000 or 10,000 shares right there, and maybe another day you do another 10,000 shares, and now you've kind of spread out your risk and distribution. Okay, that's the accumulation phase, and the same thing happens with Tesla way back here. This is what happens, is that these companies were buying out shares slowly up until the point where, boom, things exploded. They might buy 5,000 shares, then another 5,000 shares the next month, another 10,000 shares, another 10,000 shares, till they accumulate it. And then later, after a while, they start dumping it. They dump it, they dump it, they dump it. And that's what happens. So for that, to do that in pre-market, you just can't do that. And there's no point to do that. For what? For that extra dollar when in fact you're looking to make $10, $20 on a run? What's the point? So that's kind of my personal logic, and I know that other people find pre-market to be very good. And like I said, there is absolutely nothing wrong with trading pre-market. Some people make their living trading pre-market and then selling it during the regular day session. Okay, they'll buy it or sell it pre-market depending on how pre-market is acting. And if stocks are acting weak and they see, oh, pre-market is weak, then probably stocks will continue lower. They will sell it and short it, and then they'll buy it back during midday. Okay, if you do this with, let's say, Apple right here. So what you may do is, again, you're looking at, let's say, pre-market or post-market. So right here, you're looking at, right here, this batch from the difference between the after hours to the pre-hours, stocks were higher, right? After hours to the pre-market, we had a nice run up here. Okay, then stocks looked like they're continuing to head higher here on Apple. So you say, okay, I'm going to buy it. Things sold off a little bit. You can hold it, and then boom, you're out. You're out for the day midday. Now, if they continued lower, then what? Where's your stop? And that's the problem. That's the issue, is that with these inconsistencies, it's sometimes tough to gauge. But if you see that the market is looking for higher prices, then you can probably bet that maybe the rest of the day it'll continue with that energy or that momentum. And the same thing here. After hours, a little bit negative. Okay, pre-market, from between after hours to the pre-market, it's a little negative. You know, we had higher prices, then we got lower prices. Then the rest of the day probably will get lower prices. So then again, you short it, you buy it back somewhere over here, and you take your profits. And you can do this all day long and test some strategies and see what works for you, what doesn't work for you. Comparing after hours to pre-market hours. So here again, after hours were a little higher, to then we moved pre-market lower, so we moved lower. So if you shorted it right over here, okay, you're looking for lower prices, and in this situation, it wouldn't have worked out. Okay, it wouldn't have worked out. Again, here in this situation, we went from higher to kind of lower. Then again, if you shorted it, this time it would have worked out. So you have to kind of play with it and see what strategy works for you personally if you're trading this. As for me personally, like I said, I don't trade it. I avoid it. I don't like it. Every now and then I'm kind of forced to do it or forced to get out of it, maybe due to a news catalyst or a news problem. Something happens in the news and then I'm just out, only because I don't want the risk. And that is why I get out. It's just because I don't want the risk. I want to sleep peacefully, and that's why I get out after hours. And then maybe I'll get back in the next day pretty much at the same point or a little lower or a little higher. But I don't want that risk in the stock gapping down 10, 20 points or a huge market sell-off because of something happening in the real world environment. I'm just trying to hedge or get out of my position. Sometimes you can hedge with puts and things like that, but it just really depends on the stock that you're trading, because sometimes options after market hours are not very liquid themselves. So again, sometimes it's just easier to just get out of the shares or get out of the stock that you're trading, or at least half of it. So again, just a different way to just look at the risk and manage the risk. But as far as me personally, again, I don't really trade aftermarket or pre-market just because of the inconsistencies that are there. And but if you want to do it, by all means, go for it. But you need to do a strategy that works for you, that makes sense for you. And I just find that there's too many inconsistencies that go with it. You just have to find something that you can relate to. And most of the people that trade the pre-market and aftermarket hours are people that trade based off of the news. For me, I trade more based off of the technicals, and that's, for me, makes the stock move in one direction or the other, whereas the news is just trading based on fear and emotion. So I don't like to trade that way. and that's why I don't trade these pre-market and after-market sessions. All right, so thanks for joining me. Hope this video was a little bit helpful on understanding regarding pre-market, after-market hours and sessions, why I don't trade them, and if you do trade them, kind of give you a little look into what maybe you could do if you're looking to trade them. But as far as trading pre-market and after-market hours, I don't really recommend it, especially if you're new. But if you do want to trade it, make sure you're putting in limit orders, absolutely, so that way you don't get burned on your fill orders little too high or too low one way or the other. Thanks for joining me in this session. I really hope you enjoy your Friday here. Good Friday. Enjoy the Easter break. And if you don't have a break from work or you aren't on break, then at least enjoy the weekend and make the most of it. Spend some time with the family and enjoy those little moments. We had a great time there the other week at the comedy show. Just had some fun, a lot of great laughs. And of course, there's always those comedians make you look at your life in a whole new perspective or in another way, and just kind of make you think about things in the real world. And it's always funny, like the dogs, the way that they're always excited, always happy. Doesn't matter if you call their name, then they're always happy and excited. What's going on? What's happening? What's going on? Why did you call my name? And in life, it just shows you that if we were all that excited about every little thing that we did, wouldn't the world be a better place? Rather than thinking about, I got this going on tomorrow and this going on this next weekend and this going on next month. Instead, if you just lived in the moment and were just present, how much better life would be. So anyways, that was just one of the funny things and funny jokes that they were talking about. So thanks again for joining me. Enjoy your weekend, make the most of it, and I will see you next week.